The LA Probate Expert, and this is our Tuesday LARealestateInvestors.com podcast. We get together every week and talk about all things real estate, whether you're a real estate investor, want to get started, wholesaler, real estate agent, vendor. If you want to make more income and build more wealth, this is the place to be. And most commonly, we bring in people who are practitioners who are in the business, building their own income and wealth, and then offering tips and or offering you a chance to participate to increase your wealth as well. I'm really excited to have a lady that I met for my own personal investments. I'm a real estate broker in LA, and a lot of you know I specialize in probate real estate. And while traditionally that often creates real estate opportunities, I have a very active business. I'm not really into fix and flips. I'm not into buy and hold properties in Los Angeles because we're so anti-landlord. And so I invest exclusively, almost mostly, in limited partnerships, which means I put money in with a bigger group of investors into a large project. I like 200 unit apartment buildings in Texas and Florida. So I'm always looking for syndication teams and projects and people to network with. And I go on to various meetups and meet other people there. And I met a couple months ago, Vessi, and then recently saw her give a presentation, and I begged her to come on our call today, and she was nice enough. So Vessi Kapoulian, welcome to our call today. Hello?
Thank you, Bill. It's a pleasure to be here and really appreciate Can you hear me?
I can hear you, yeah. And I'm sure I butchered your name. So do me a favor. Go ahead and pronounce your name for us.
It's pronounced Vessi. Yeah, Vessi Kapoulian. Yes, you pronounced it perfectly well.
Wow, but I stumbled into it accidentally. Okay, very good. And so you don't seem to have a local California girl accent or Valley girl accent. Where are you from originally?
Originally from Bulgaria. Came here many, many moons ago. So this is really home now. But yes, grew up across the pond, as some people like to say.
And so how did you get into real estate investing?
You know, that's a great question. Reflecting back on it, I would say probably the real estate seed, if you will, was planted in me back when I was in Bulgaria. When I was growing up at the time, we were still behind the Iron Curtain. So really there wasn't a developed stock market or any open market for that matter. And the only investment or when speaking of investments, what most people related to was real estate, and that's owning their own home, maybe a second home, and other hard assets like gold, silver, typically in the form of jewelry. So when I arrived to the US, that's when I discovered the stock market, but never really quite warmed up to it, partly because of the volatility, partly because I wanted to have control and be able to manage the assets and my investments. So that seed, if you will, didn't quite germinate until 2017 when I started making my first real estate investments out of state, really in an effort to diversify my existing portfolio away from the stock market, and B, build a nest egg to really manage the risk that some people or many people may face at retirement, particularly when you have your 401k and other holdings tied up in the stock market. So in my case, it was a very gradual journey. Started by investing out of state in single family homes, duplexes, and eventually the desire to scale led me to consider multifamily as the next step. So I started that journey last year and closed on my first two multifamily properties. One is a joint venture, a smaller one, and a larger one, which is a syndication earlier this year.
So tell me about your syndication property. I'm most interested in those.
Yes. So what specifically do you like to know? Happy to share as much as you'd like, either the journey of getting there or specifically about this investment.
Well, the journey is always interesting because we all are in a journey of some sort. And I know I heard you tell the story, but it's interesting. So please.
Absolutely. So you probably often hear that multifamily is a team sport, and that's very, very much true, because once you start getting into the multifamily segment. And again, that's usually 5 units or more. You're really not only investing in real estate, but you're also running a business. There are many facets in that process. So it's very challenging for one person to do it by him or herself. And very often people team up. And generally speaking, when you team up with other people, everyone has their own lane or values that they skill set that they bring to the deal. How I got involved with the syndication was really finding a way to add value to others. For me, that entailed evaluating the deal, underwriting the deal, and really being that second set of eyes. Because by the time I was brought in on the team, the property was already under contract. And I had been working with one of the GP or one of the general partners on other deals. He brought in that deal to me to evaluate. Took a look at the numbers. It seemed really strong. And I was asked to join in and participate. After joining the team, I was able to add value in other ways, such as the diligence process and particularly some of the lender-specific queries. Given my background and lending experience, I was able to help with the market presentation. And now that we have officially closed on the property, I'm helping with some of the asset management, financial diligence, really more of the number-related activities, is that tends to be what my strength is, what I naturally gravitate towards. But really it was finding a way to add value to others is how I got involved with that particular deal.
So let's talk about today. Are you currently raising money today for a project? Or are you just meeting investors, getting ready for your next project? Or where are you in your current process? If somebody said, I'd like to participate with you, how would they get started?
Yeah, so really the best way is to have a one-on-one call so I can better understand what that person's individual objectives are and how I can serve him or her better. I'm always open to having those conversations because very often when these deals come up, they're usually offered on a first come, first serve basis. And particularly if they're structured as a 506B syndication, which is usually reserved for family and friends, and that requires the sponsor to have a pre-existing relationship with the limited partner or with the investor. It's always great to have those relationships established up front. So one, people can actually participate if they choose to join me on these investments. And two, so people don't feel rushed going through the process. So I'm constantly having conversations. I don't have a deal on the table today, but I often look at opportunities, either sourcing those myself in Florida and or partnering up with other experienced operators in other locations that meet my market criteria.
I'm definitely interested in anything in Florida, 200 units and up. Please keep me in mind.
Okay.
Florida is like my old girlfriend. I can't talk about her in front of my wife. I'd like to move there, but my wife and I have a grandson 4 blocks from our house, so we're not going anywhere. So I talk about it when she's not around. I'm very bold, but I can't. She's out of the house right now. I can talk quite a bit. So here's your website. I'll get off my own personal nonsense. DBA Capital Group, and on the contact us click link, you have a phone number and an email page, and then you can just click here and schedule. My favorite application computers is Calendly, where you can just pick and schedule time and talk to somebody. And so you're pretty available as far as that goes, like most people. I also know that one great way to meet, so I'll put that in the chat box. I'll just put it in the contact.
Thank you.
One great way I find to meet people is podcasts like this or Zoom calls like this. And I know you're pretty active regularly. And by seeing somebody, I don't have to ask you questions and go through the sales process of, do you do this, do you not do this, and rejection and all that. It's great to meet you. So I do know you participate in a few. What are some of the places that you go more regularly? Mm-hmm. And explain to me how that factors into your business development efforts.
Absolutely. So I attend both in-person events and virtual events. The in-person, of course, I like to have that one-on-one connection, and they're all local to LA. The virtual ones allow me the opportunity to connect with investors nationwide outside of the LA market. So specifically in LA, meetups I attend include, yours is one of them, of course. The Multifamily Masters has a couple of chapters. Some are still virtual, some are in person, like the one in Glendale. And then Phoebe Pasadena, FIBI, they have in-person meetings. There's also Phoebe Long Beach, which they still have their meetups virtually, although I'm hearing they may be bringing those in person now. And as far as nationwide virtual meetups, some of the ones I attend are Zoom at 8 with Julianne.
Today at 5 o'clock, it's Zoom at 8 Eastern time. It's
time.
5 p.m. Pacific time. I love that. And
Yes.
she's in San Diego Pacific time. I just find that one crazy, but that's Julie.
Yes. So that's one of them. I think Iona Wise has a good one. It's on every Wednesday. Occasionally I attend the Shark Tank or the Shark Pool. I think they've rebranded. It's every Thursday. So those are just a few of the online ones I attend. Really, my goal there is to connect with fellow investors, active or passive, as well as have ongoing discussions about the markets, the deals that people are working on, and really allows me to keep a pulse on market trends and conditions.
So there's some good ones you mentioned. The Zoom at 8, which is, again, it's 5 p.m. Pacific time. And that's with Julianne Peterson. She's with Old Capital. They actually have their convention, I think, this week. Yona, what's his last name? Yona Weiss has one on Wednesday.
Weiss?
And that one's another one that's very well attended, consistent. And I think his specialty is cost segregation. And so he kind of breaks deals down, and very popular guest because he can really help syndicators get extra value up front for investors. So those are two good ones to go to, regularly in addition to this one. And then we have a small one on Wednesday we're trying to build out as well. So I'm sure you must meet. Now, before going further, anybody on the call here is a guest. This is meant to be participative. The reason why we do it in Zoom is so you can participate. It's not just to have your pictures, as pretty as you guys are. So feel free to raise your hand in the Zoom app or type a question in the chat box. And the purpose of this is make it interactive. There's no silly questions. There's no stupid questions. If you think to ask it, there's probably 5 others who are scared to ask it. So feel free to jump in anytime. Though I could talk to Vessi all day, and I probably will talk to her longer than they should. So let's talk a little bit. I'm sure in the course of your business, you talk to, I know, some very sophisticated investors and teams, but you also talk to some people who are looking to get started. They're scared. They want to pull the trigger. They can't. What is it that you find that distinguishes people who actually finally pull the trigger? What is the thing that gets them get started?
There are a couple of things actually that come to mind. And one advice I give to everyone is start with clear goals and start with your why. Why do you want to do this? Because it's the why that will push you during hard times and help sustain you. It's also the why that will propel you further when you're continuing to advance. And once you have that, it's also about overcoming your own limiting beliefs and fears and really taking action. And when you look forward or too far in advance, some of those goals may appear really overwhelming. It definitely, that's how it felt for me when I first started. But if you really focus on taking that first step and then the next one and the next one, over time, when you look back, you really you will see how much progress you've made. So definitely, yes, have a goal in mind, but also focus on taking action, even if it means one tiny small step forward before.
Yeah, excellent. Good answer. George Ortega, you have a question for us?
You know what? My question was the same thing she just answered. Is how is it a one, or what do you recommend for one to just starting out? Because I find myself that even though I want to start, getting the right people around you to kind of advise you which way to go, or don't do this or don't do that, or right now this is the best way to go.
Right.
Those are the things that I'm having a little issues with because
Mhm.
it seems like everybody's kind of trying to holding on to their information, you know?
Interesting. Yeah, and you bring up a really great point, George. Surrounding yourself with positive, like-minded individuals, people who can propel you, is definitely important. And also I would say, getting the right education. When I was getting started, a lot of the experienced people I spoke with or connected with on forums like this one, almost all of them recommended to get a mentor and get a coach. So I actually joined an educational or mastermind program. I really think, and again, this is my own experience, right? I really think that this helped propel me forward because I had an opportunity to work with a coach. I also have access to that network, if you will, of like-minded individuals who are now my partners on some of the deals that I mentioned. So it's one thing I would definitely echo and recommend. Now, can you be successful without joining a program? Of course, you can be. It's just maybe it will take longer. And personally, I wanted to have access to that environment, if you will, or network to help achieve my goals, as well as have access to a coach who could help me avoid some of the mistakes versus reliving them or going through them myself.
Yeah, everything in life, you got to start, and you're going to make some mistakes, but you got to get in action. One of the tools, so you take both accredited and non-accredited investors as long as you have a relationship with them.
Correct.
So, what's the minimum typically on your programs for non-accredited investors?
The typical minimum is 50,000
Yeah.
to join a syndication. Yes.
So, even though I had multiples of that to invest in my beginning, I found that it was so hard to pull the trigger. I kept looking and looking, and I know one tool I've used and educate people to try is Cardone Capital, Grant Cardone. He has an non-accredited offering that's always, I think, $5,000. And the nice thing is that for $5,000, you get in on a big project and you get to see all the paperwork and the numbers and the explanations. And then you get the check every quarter, which is nice. It's not much on $5,000, but it's nice to get rather than pay. It's more than interest. But to me, that got me started. And then all of a sudden, wiring $50,000 and $75,000 became easier after a while. So I like Cardone Capital as a starting spot if it's a dollar amount that's an issue for you. And then also, obviously, meeting people, spending more time with them. There's something about, I was on a call with Vessi, I think about 2 years ago, and like the whole call are people who are, all they do is syndicate and make a lot of money, and it's all passive. And I'm a broker. I'm every day, on the hustle. Now, I make good money. I'm not complaining. But it's like, wow, these people make a lot of money. They control a lot of assets. I want to be more like, I want more of my money involved with that. So then I kind of went back to researching and looking for investment. So, but thank you, George, for bringing that up. And, we all need to get started. And we also, more important than just you, George, you're an agent, right? It's not just you, it's your clients and your friends and family that you want to, be an example for. And that's why I do this call is I don't do this just for myself, which is important. But part of my why is I have clients who need to invest money or make stupid investments rather than something that makes more sense for them.
Yeah, I do have a client that has like literally like 100,000 under the mattress, and she's asking me for advice, and
Right.
I'm trying to find the right advice because with all these things, 2008, a great example. Even the banks were giving bad advice, terrible advice. So I want to be, like you said, I want to be the right source to come with, but giving the right knowledge as best as I can do.
Right. And I think oftentimes when people ask, really, I think the most important thing is if you can educate them and help them on their own, that's better than you giving them advice. And so I find buying a book like Rich Dad, Poor Dad, and pointing them to Grant Cardone's Cardone Capital, I think helps them learn more and have more confidence on their own. Vessi, what do you do when people come to you and don't have $50,000 to start with, but they want to change their life? What do you recommend as first steps? Coaching, is that really the main thing?
If they're wanting to be active, not everyone wants to be active. And so if they want to invest passively, I definitely would like to educate people, which is really how my bi-weekly articles were born. So I issue articles every other week, really in an effort to educate investors and produce content to help them make those investment decisions. And yes, when then the right opportunity comes that may be better fit with the budget they have at the time, then we join in and work together. So I hope that answers the question. If not, I can expand further. Oh, here they are. Yes, I see you put the articles as well.
Yeah. So there's a link on our website to the blog. I put it in the chat box as well. So yeah, I'm really big on education. The more people know, the more comfortable they're going to be. George asks, what's the average return for a non-credit investor Beget investing $50,000? So
standard return. So that really varies. I would say generally speaking, what you'll see in multifamilies, cash on cash returns from 7 to 10%, average annual returns anywhere from 13 to 17%, and then IRR anywhere from 14 to 20% as well. And if people are not familiar, I can explain that terminology as well. But those are more general. In the current market environment, those returns have certainly compressed, and we can talk more about that. The returns would also vary based on asset class. Again, what I just shared pertains to multifamily. Within commercial real estate, there is self-storage, mobile home parks, commercial retail. Some of those asset classes would generate different returns. It really boils down to risk and return parameters.
I'll share you guys one investment I made in December this past year, $50,000. I got a $41,000 loss on the K1 because of the accelerated depreciation. Some special laws in effect last year and will be in effect for this year as well. So I got a $4,000 negative K1, which meant that I immediately saved my taxes about $9,000 on a $50,000 investment. Plus, cash on cash, we're getting about 6% return right now. But I just have to update for the quarter that rents are going up by an average of 35% because of inflation, meaning the replacement rents. The increases on current tenants are 5.5%, but the replacement rents are up 35%. So, multifamily has so many different ways to make money. It's not maybe get rich quick on one at a time.
Right.
You can probably get rich over time. And also, but we can syndicate and make a lot of money. I'm just not in that part of the business, but phenomenal investment opportunities and ways to make money. But for a $50,000 investment, I think you should expect better than stock market average yields over lifetime. And my experience is 6 to 8% cash on cash, and then they sell or refinance about 5 years down. You get another distribution. You end up averaging 12 or 13% per year, and you get the depreciation up front, which makes it even more pleasant in the early years. Though, of course, if taxes go up in the out years, then it's not so good. So,
and these returns are net of fees. Usually when you see stock market returns, those don't necessarily always account for any brokerage fees you may be paying or mutual fund fees. Right. So what Bill and I just shared is net of the sponsor fees.
Yeah, that's actual cash distribution. It's nice, each month I get little deposits in my bank account, and my bank sends me an email with deposits. So sometimes it's a small deposit, like ATM rebate of $3, whatever. Interest on the checking account's not much, but you get deposits from my investments. It's like, wow, that's a nice one. Wow, that was smaller. Wow, that was a nice one. So that's mailbox money. My money's not working for me 24/7. Right. I need more money. I need more money out in the streets working for me. That's my goal.
Right.
Okay, and again, this is participative, so feel free to ask questions and jump in. This is what we do, and how we learn is by stepping up and growing. And I'll just say, it comes a commercial in passing. This is the official podcast for the LA County Association of Real Estate Investors, Lloyd Siegel's program. We have a meeting once a month, the second Thursday of the month. We had it last week in Los Angeles, Culver City area. We do it on. Vessi, you should come to that. Okay, were you there?
Send me the details. I would love to, as I'm very close to Culver City, actually.
Yeah. It's LAREIC.com is the website. And it's a great event. It's on Thursday nights in Culver City, second Thursday of the month. So it was last Thursday, will be next month in October. And what happens, we get about 250 people in attendance, and there's usually a speaker. Vessi, you'd be a great speaker for this event, by the way. You're at least as good as some of the others they've had on there.
Oh, that's Mr. EDU.
That's Mr. ADU, yeah.
Okay, very nice.
Gold, I think his last name is Gold.
Yeah.
And then, so then in addition to that, there's a vendor expo. Where's the picture of that? There you go. And usually about 50 vendors. I'm one of them, and we live stream it. And then, so it's also the second Thursday, and it's the second Wednesday, which happens to be tomorrow night in Ventura. So if you're in Ventura area or San Bernardino, Santa Barbara, if you go to the Ventura real estate investors, I know it's there somewhere. Hold on, let me pull it up. It's VC for Ventura County Real Estate Investors Association. It's on Wednesday, tomorrow night at 6:30 p.m. So feel free to go to VC for Ventura County realestateinvestors.com for that information. So love to have you come to that. And any of you should come. It's free. The event's free. Parking's free. And I host a live stream and get you interviewed and get you on social media and such. Okay, so got some good questions. Diva's in the house. What is up? My favorite Instagram account. I think if you get a chance to know her, you get a chance to follow her. So she asks, what areas of Florida do you invest in?
Yeah.
And then, or do you think are experiencing good growth?
Specifically within Florida, I focus on Jacksonville, Central Florida, which is Orlando and vicinity, and then the Tampa, St. Pete markets. There are obviously a lot of other cities within Florida, but I've chosen to focus my efforts there because they meet my market growth, job diversity, quality of jobs criteria. And especially when you're investing on the active side, in my case, I think I mentioned at the beginning of the call, I focus on sourcing as well in Florida. It's important to build those local relationships. So if you're spread thin, that becomes more challenging to do. Hence why I've zeroed in on these 3 cities only, and really focused on building broker relationships there. Specifically in my market, 92% of the deals are originated from brokers. The remainder is direct to seller. So I've decided to channel my efforts on the 92%.
So again, Jacksonville, Orlando, and where else?
And Tampa/St. Pete.
Tampa, St. Pete.
Yeah.
I love Orlando. I love Jacksonville. My best friend moved to, well, I say my best friend, every 2 years my best friend moves and I have a new best friend, but the latest one moved to Dania near Fort Lauderdale, but the one before that, my best friend moved to Jacksonville. I love Jacksonville. I love it for the military base, the jobs market there is fantastic, the tourist climate there is fantastic, diverse economy, and Orlando also just so nice, such a nice place. So, and then she asked the question, how do you find your deals? You mentioned working with brokers. So is there a couple that you work with that send you deals? Do you broadcast out? I know I get approached by investors. I'm always surprised if you're that successful, why you're reaching out to me, not like they meet me at a networking event in person, but they just on the phone or email blast. I think, well, what kind of successful investor would just cold call or email blast? So how do you work with brokers that you work with?
Yeah, for me, it really started with LoopNet, right? And looking at those deals. I know a lot of people say, hey, that's where the deals go to die, but slowly but surely you talk to one broker, you get one listing, and then you get on their list and you get another. I usually, when I evaluate a deal, I make the time and the effort to always get back to them. Not all the people do when they evaluate the listing. So I think that really over time helped me build rapport and relationships, and now I'm on their email lists and email blasts. A lot of people ask, well, what about off-market listings? And in the current environment, those don't really exist because it wasn't really in the broker's best interest to limit the market or exposure of a deal to other sellers. And the reality is most of the time for those napkin or pocket or or other listings. Those are usually socialized with a number of investors, not just one or two. But I think it's ultimately goes back to how responsive and communicative you are, and really then giving them the confidence that you can execute on the deal, because at the end of the day, they have a commitment towards the seller, and it's building that rapport and confidence, which really, again, happens over time. It's not something that happens overnight, especially in my case when I was entering a new market and really trying to establish. So.
Nice. Let's see here. So we got a question from Jackie. Jackie, I don't know if Vessi, do you know any local banks in Jacksonville that can do portfolio loan? Now, normally a portfolio loan, a lender is going to do business throughout the state and maybe even multiple states. I'm not sure why local to Jacksonville. Do you work with any particular banks, Vessi, in the Jacksonville market?
Not anyone in particular, and generally speaking, I like to work with brokers or mortgage brokers because they have the ability to socialize, if you will, a deal with multiple lenders in the net to obtain the one that best suits my business plan, or I should say our business plan. Yeah.
Diva asks, going down a little bit the coast on the east side, south of Jacksonville is Daytona Beach. What do you think about Daytona Beach? I'm going to say, Diva, I love Daytona Beach. You've got the racetrack, NASCAR. You got cars driving on the beach in Daytona. You have the air show with I saw the Blue Angels there not too long ago. I love Daytona Beach, but do you know much about it, Vessi, as an investment climate?
I haven't really been looking into that actively. And again, I've been mostly focused on the three cities that I mentioned because, again, I like the diversity of jobs there as well.
Yeah, Daytona is famous because of the beach and famous because of the NASCAR track. But having been there, I think it's certainly not as big or diverse as the other three markets that you're in. So it's a great place for vacation. I don't think it's quite. Joyce says, what do you think of all the Scientology activity in St. Petersburg? I wasn't aware of that.
I wasn't aware of that either. I guess there's a lot of that going everywhere. It's certainly not one of my investment criteria. So, so I haven't really been following that. But what's interesting now happening in my market, there's been a lot of talk around rent control. And surprisingly, actually in Orlando, specifically Orange County, which is the largest county in Orlando, the proposal for rent control made it on the November ballot. It barely passed 4-3, but it passed. And now the local association is suing the city because that contradicts state law. Florida is not allowing rent control. So it will be interesting to see how that one progresses, but this is one I'm following very closely. And certainly other counties like Pinellas and Hillsborough, Dade, so that's St. Pete, Tampa, and Miami, respectively. Those are watching to see what happens within Orange County, because there's been certainly a lot of activism to implement rent control. Again, the local experts and my boots on the ground are all in consensus that this will likely not pass. But it was put on the ballot, which nobody expected either. So that's something I'm following very closely as well.
It's amazing. Everywhere they have rent control, there is squalor, there are dilapidated buildings, and then ultimately homelessness. And why is all that going on? And of course, nobody's responsible for that. Jack Lapidus says that Jacksonville is no good for the football. I think he's pointing out that they lost their home opener, I think, this season. Something tells me, Vessi, you're not a big NFL fan. Am I making assumptions there?
Yeah, I don't follow that very closely. Once a year, maybe I'll cheer at the Super Bowl. But,
maybe do you root for the Bulgarian national soccer team, maybe in the World Cup?
Maybe if they qualify. Which
hockey, probably. You guys are big on hockey, I would think.
Yeah, not much hockey actually. Mostly volleyball, gymnastics.
Water polo.
Yeah, water polo.
Oh, Bulgaria's big on water polo. Yeah. Okay. Thanks for your questions, Yurok. Diva, love having Diva was a colleague of mine who went to the Grant Cardone event, and she came to our LAProbate event, and she's a big personality. So glad to have her on. Okay, so Joy says that Scientology is a major in taking over the city government and controlling what happens. Wow. Well, look, we have Scientology here in Los Angeles. It is what it is. I mean, there's some positives to it too. I think, I haven't done a deep dive on it, but I think there's worse problems in life than a growing Scientology neighborhood. I think, personally living in Los Angeles, we have a long list of problems, and that's not the top 20 or 30 of mine. But we're all entitled to our opinion. And Joy, thank you for sharing, and people should pay attention to that. Julie says, so you don't recommend to start off investing in off-market homes. Is that correct? I don't think that's quite what you said.
No, it's just the strategy I did not follow. You can certainly go direct to seller, especially if you build systems and processes around it to automate the process. It's just a strategy I personally chose not to pursue, and mostly focused on where the larger market share within my market was. But there's certainly a lot of people who have been successful in focusing on direct to seller campaigns.
Yeah.
And it's certainly one way you can start as well.
My brother-in-law runs a REIT, a real estate investment trust, Rexford Industrial, one of the largest in Southern California-based industrial properties. He was a commercial broker and knew a lot of the owners of properties when he was a broker. So when they became a REIT, they've developed a database, and they really do most of their business off market. But he started as a broker doing business off market. So there's a strategy. I think the key is one strategy right or wrong. It's what strategy you're going to work, and you got to work it hard to get the results you want. It's really your preference. And in Vessi's case, she's in Los Angeles. You have the best of both worlds, I guess. You live here in LA, but you're investing in Florida.
Right.
I guess I'm doing the same thing. So, it's great. I love living in Los Angeles, but I don't like having a business here too much. It's kind of crazy.
I know.
But it's great to have a business in Florida. So,
yeah.
Joy just moved from Florida. Wow, I did that in 1986. I moved from Florida. I grew up in California, went to Florida for 2 years, moved back in 1986, and I've wanted to move back to Florida ever since. So it's my wife's home, so I can't talk much about that anymore. Julie asked about foreclosure homes in Florida. That's a whole business too. I do know that there is a pretty active market there for distressed properties, and of course the market now. I just noticed today, for example, interest rates jumped from 5.99 to over 6.25. That's a pretty big jump. I don't know. We had a big inflation report today, and I don't know if that means it's the beginning of a movement or that's just the jump again, but really kind of crazy times to be in real estate. And Joyce says, LA is a huge market. St. Petersburg is, by comparison, tiny. It's not the religion, it's about control. Yeah, okay, Joy. I mean, I get it. I'm not an investor in St. Petersburg, so it's not really an issue for me, but sounds like it's a big issue in St. Petersburg. Interesting about the Scientology. Has anybody else heard anything about Scientology being a big issue in Florida or anywhere else? I just haven't seen that being a...
First time I'm hearing this question raised, and I haven't really focused on that as my market criterion. Really, I focus on the fundamentals around population growth, job growth, income diversity, quality of jobs as well, because ultimately it's the market, right, that will propel your business plan. You can do a lot of things to the outside of the property, but you cannot change the location. And how I view the market is the tailwind, and that helps push you forward or farther along as you start executing on your business plan.
A few months ago, big news was BlackRock was buying up all the properties, and then today announced BlackRock is pulling out of a lot of these properties. They're at the edges. Certain markets are very volatile, go up and down. What the markets that Vessi is talking about are much more stable. They're enjoying good growth, even in a down economy nationwide. These are markets that are outperforming, have outperformed, probably will outperform going forward. That's the concept and the theory behind it. And like I said, the investments I have in Florida got a 33% or 35% rent increase for newly rentals. So if instead of 35, it's only 15 or 20. It's still phenomenal improvement in the income. They projected 20 when they got the deal. So everybody's really excited about it.
I mean, for one of our properties, we were looking at 13, and that one is in the Tampa MSA. We were looking at 1350 rents, 1350 to 1400. We just leased our last unit at 1650. And again, that was only 3-4 months ago.
Beautiful.
A lot of positive change. Yeah.
Yeah, I think in these markets, and I think that's the other thing, that when you're in a market, when you're in LA, one of the things you have to pay attention to, our economy is actually pretty good in LA, our housing market. Now, there's a lot of people at the bottom suffering, no question about it. It's really heartbreaking, but the top are making a fortune and overall. And so you look at the market and the inventory is stable. And so as long as that's the case, you can't have a market crash, because the only way you have a market crash is if a bunch of people have to sell houses. That's not happening. That's not happening nationally. It's not happening in LA. It is happening in some markets, and those people are going to have a tough time. But when you only have a certain amount of houses and the population's growing, they're going to pay to be somewhere. And so anyhow, it's you have to know your local market, and you have to know your product, I think, real well. Okay, I don't see any other questions. Vessi, I've really enjoyed meeting you, getting to know you. I look forward to you finding a deal in Jacksonville, Orlando. I don't know that I would go into Tampa. I'm rooting for Tom Brady. I love their new uniforms over the old ones, but I don't know that I'm quite in that market. I'll tell you a quick story. The only time I was ever in Tampa, I lived there in 1984 and 1985. 1985, I met my girlfriend, who's now my wife. For the weekend, we were going to go to Tampa. We lived in Boca Raton, which is on the southeast part of Florida, on the ocean side. And you cross the state to go to Tampa, which is on the Gulf Coast, about central, on the Gulf side. So to drive across Florida was, I think, about 4 or 6 hour drive. But, we're dating, it's fun. You drive together. We get in a hotel, and I'll never forget, she's in the shower, and I turn the TV, and every channel had like this odd kind of visual. And I'm like, what the heck is this? It looks like they're evacuating. It was a map of Tampa, and they were evacuating the city because a hurricane was hitting. And so we didn't know about it. So I said to my wife, because we didn't live there, we weren't paying attention to the hurricane news. I'm a Californian. We don't really pay attention to these things.
Right.
So I said to my wife, honey, don't panic. Just get dressed. We're going to have to leave. They're evacuating the city. So we go out, and at the hotel lobby is packed with people who were displaced. They had chased by the hurricane south from the panhandle and had no place to stay, and we're in the lobby. So we gave our room to some honeymooners from Alabama who had escaped they thought they escaped the hurricane. Turns out they made a wrong choice. We drove to Orlando that night because I had gold passes at Hyatt. We got a hotel room in Orlando that night. Mm-hmm. Drove the next day. We raced the hurricane across the state to get to Boca Raton. We get home to Boca Raton, and the weather's perfect. It's just like 80 degrees, sunny. Our friends are at the pool. We're at the pool, and we're tired. We've been driving for 2 days.
Right.
And our friends like, where have you guys been? Oh, we're in Tampa. Oh, it's been beautiful here the whole time. They didn't even know there was a hurricane. So that's my experience of Tampa. I'm not necessarily anxious to go back. But Jacksonville I like, and Orlando I go every year for conventions. So I'm definitely interested in either of those.
If you're looking to avoid hurricanes, definitely Orlando, being more inland, is a safer bet for sure. Yeah.
I go there every year for business anyhow, and then Jacksonville's a side trip. So either one of those I would definitely be open to. Okay, guys, I don't see the last question, so thank you so much, Vessi Kapoulian, for being on our call today. Again, her company is DBA Capital Group and dbacapitalgroup.com. We'll put it in the description as well for more information. Very accessible, obviously, very sweet lady. Follow her, join her on some of these other calls, read her blog, and then feel free to give her a call and or schedule time with her right on her website. I see one, I got some clapping. Well, thank you for the clapping. Okay, well, thank you. And again, I'm Bill Gross. We do this every Tuesday, 3 p.m. Pacific, 6 p.m. Eastern. We live stream on YouTube and Facebook. This is the LARealestateInvestors.com podcast. And we have our event in Ventura tomorrow night, VC, realestateinvestors.com for that event, or LAREIC has both events. Look forward to seeing you guys soon. Thank you so much, everybody.
Great. Thank you, Bill. Thanks for having me.